Welcome to the Techno Fundamental Report for January 11th. Just finished reading Walter Deemer's first book. He actually has 3 books. I've read all 3 of them over the weekend. And basically, it's about technical analysis and why it's important. And I thought I would just show some of the quotes from the book just to make a point. If it sounds too good to be true, it almost certainly is. How many times have we been approached by people that simply say that they can outperform the market and that there's no risk to what they're doing? As Deemer says, it just can't be done. So here's another one. Just when you find the key to the market, they change the locks. Gerald Loeb, E.F. Hutton, 1955. When everybody thinks alike, everybody is likely to be wrong. You've got to be contrarian in your thinking. You can't go with what everybody's doing because it becomes self-destructive. There's no such thing as a one-decision stock. You know, I can remember my dad, or my grandfather actually bought railroad stocks, passenger railroad stocks, thinking that it was a one-time decision. And then, I can remember when I bought my first stock, which was Gulf States Utilities back in the 1970s. It was like a one-decision stock, but they ended up basically going bankrupt. They didn't go bankrupt, but they came close to it. Technical analysis is the most basic part of investment analysis. You buy stocks, not companies. Technical analysis is what you use to analyze stocks. It's important to understand fundamental analysis, but it's also important to understand technical analysis, because what you're trying to determine is there imbalances here? Is there an imbalance in the number of sellers? Is there an imbalance in the number of buyers? And that's what technical analysis is designed to help you to determine. A stock is not the same as the company. He tells a story in his book where he goes back to the 1970s, and during that period, McDonald's stock, their earnings did spectacularly well between 1972 and 1980. Their earnings went up 25% per year during that time period. However, the stock lost 50% of its value. So if you've got more sellers and there's an imbalance there, no matter what the circumstances are, the stock went down. Also, it was a very difficult bear market. No stock in an uptrend has ever gone bankrupt. I completely agree with that. I have never seen a stock in an uptrend go bankrupt. So let's take a look at interest rates real quick. That's what kind of more or less caused this recent correction. You can see here that the 5-year Treasury note popped back from 3.8 up to about 4%. You can see that the power index turned back above 0. However, it does appear to me that interest rates are in a downtrend. For example, here's the 2-year. That's a downtrend. Now, the definition of a downtrend is where you make a high, and then you make a low, and you make a lower high and a lower low. So this is in a downtrend. Here's the 5-year downtrend. Here's the 10-year, also in a downtrend. So interest rates continue to be in a downtrend, however, having a short-term rebound. Here we go with the primary trend, which is the 200-day moving average. The primary trend is up, both on the S&P and the NASDAQ. Now, I wanted to refresh your memory on the Copic curve. The Copic curve is an indicator that I introduced us to last year, and it's designed only to determine if the market has made a bottom. So you can see here back in, here's the 1990s, you get the move above 0, market has made a bottom. Here's 2003, the back above 0, the market has made a bottom. Here's 2009, back above 0, market has made a low. And here we are in 2023, first quarter, market makes a low, and then we turn above 0, and the market makes a low at 3,600. No guarantees with this, but it does appear to me that the Copic curve continues to be a good indicator to keep an eye on. The VIX, the volatility index, the fear index, is down at readings around 12.7, which, as you can see, when it gets down to these types of readings, good things tend to happen with the market. You get into these low readings here, good things tend to happen with the market. So the VIX is showing a very positive signal here. Now, the aggression index, as I've said, this was a very handy indicator that we used back in 2021. Pretty much told us that the growth stocks were starting to waver. We got the major sell signal here in the fourth quarter of 2021. You can see what happened. Well, we've been in an uptrend here since the low was made back in 2023. And you can see that the aggression index continues in an uptrend, did pull back in the first week of the year, but is bouncing back. So continues to be in an uptrend. Now, our three economic indicators, you can see here where interest rates did get down to about 3.8, popped up to 4%. We've got the price of oil continues to be in a downtrend. However, it's stabilizing around the $70 area. The financial stocks, which are primarily banks and insurance companies, is in a very strong uptrend, which is incredibly important. The new lows on the New York Stock Exchange continue to be low, below 40 a day. This is very constructive. Now let's look at three stocks real quick. These are three stocks that I own in my portfolio and my firm owns in their portfolio. So just kind of from regulatory perspective, I need to disclose that. So here's CrowdStrike. This is cybersecurity. Now you can see here where you get this massive gap up of over 12 million shares. Stock breaks out above a base, goes into a very nice uptrend. Now in the first week of the year, as you can see here, we got some volatility in here. However, once the pressure came off, we break out again and the stock is making all-time new highs. This looks very constructive. Also, this is the relative strength line relative to the S&P 500. You can see it's definitely in an uptrend. Also, you can see that the trend meter is in the green. This stock looks promising to me. I continue to hold this stock. NVIDIA has moved sideways for an extensive period of time. However, just this week, broke out on a gap up. A gap up is where the stock trades volume that's 1.5 times higher than its average volume. So in this case, the average volume was 41 million shares, and it traded on this particular day over 60 million, and in this day almost 80 million. So you're getting a major gap up here on NVIDIA, very strong uptrend. They're also making announcements about new products. Here's Spotify. Now, this is an interesting study. This is a company that's like a Netflix, but they have a subscription-based service for music. And you can see here that the stock's been moving sideways. It's not in a strong uptrend. It's actually moving sideways. So this would basically be on my watch list. You can see here, though, we got a little bit of volume coming in here right about this period here where it broke out above that base. So what you want is you want a nice flat base that's tight, where you've got, in other words, what you're determining here is, are the buyers in control or the sellers in control? When you get a tight sideways movement, it tells you that the buyers and sellers have pretty much reached parity. Well, all of a sudden, boom, you get a breakout. This means to me that the buyers are now taking over. So if you have any questions, please let me know. Thank you very much.